Mining town property is bouncing back. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Domain discussing, well, the bounce back in mining property. You know, houses out in the mining areas here of Australia. Now, we all remember those articles that we heard. Maybe I just kept an eye on them because I was involved in some mining projects about people buying up houses left, right, and center in these towns. You know, paying hundreds of thousands of dollars for some of these these houses in the middle of nowhere, literally the middle of nowhere. The real estate agents who bought like 7 houses and were just raking in the money, because a lot of that was to do with the capital expenditure. If we bring up here, I'll just jump over. I brought up Google Earth, and you can see all the mines here in Australia. Now I'm going to turn these off and just look at the coal ones here. And we'll zoom in. You can see here all of the coal mines here in Queensland. The further north you get, I mean, there are lots of them. And, I mean, what you'd have, a lot of these names I recognize: Rolleston, Blackwater. We worked on Daunia and Cavill Ridge, Goonyella, Peak Downs. I recognize all of these names because we've worked on a whole lot of projects or proposals for these mines. These mines here. You know, this is where really we got a whole lot of specialist skill in volumetric modular design and construction as architects. Now, what happened was, you know, places like Emerald and Maramba, all of these places up here, Peak Downs, the towns as well, started getting huge demand for workers, you know, temporary accommodation, people going out there. So there was a shortage of housing. And you'd have businesses that would set up and build huge temporary accommodation places in the town, and you have drive in, drive out from the town. You have people flying out there to work. So it went crazy. It bubbled. And now apparently people bought in at the peak, and it crashed. It really crashed. The property just went ludicrously down. And now apparently it's bouncing back. So we'll have to see. The remarkable recovery, and let's see if they've reached their peak. I somehow doubt it, but the remarkable recovery of property markets in Australian mining towns. So property markets in mining towns around Australia have begun to record a strong recovery in the past year, which experts are saying could be the beginning of a new boom. Could be the beginning of a new boom. Is there similar CapEx now being invested in mining? Is there similar CapEx being invested in mining, everyone? Because, well, when we saw, I'll bring up a chart here that I want to show you. This is the Australian economic data. We've got hours worked. This is from the RBA, their economic charts. And you've got here, you know, mining and non-mining business investment. I mean, business investment has plunged. So industry share of business investment. Mining, we can see it here. It's plunged, guys. It's plunged. So, I mean, is there a new mining investment boom? CapEx, is it shooting up? Will that drive the boom? Because that's what I'd be looking for. Something like this. I guess iron ore has shot up, everyone. It has shot up. And I'll bring up trading economics just so we can see that in a moment. But that makes me question the claims that we've got a new boom here. I mean, those of you in the game, in the mining game, let us know in the comments how, you know, what you're hearing on the ground, what new projects are going on there. And if we go scroll down here, we can see iron ore is at $117.50 US an ounce. So it's an ounce, a ton. I'm used to gold and silver, guys. You can see it's climbed back up. You know, it hit down to $80. $50 is when our budget, the government's budget, needs to start worrying. That's what it's based on, $50 mark. So anything above 50 US a ton is good for us, good for Australia. So we'll have to see. What about coal? How is coal doing? If we have a look here, that's another one that you're watching. It was interesting. Whenever the price of coal is down to 55. So when it was really high, and we'll go out to 10 years, it's around about here. Here, 2011. This is when we were working in the sector. Notice the price, how high it was. And then it started heading down. Then the money they were investing, the capital expenditure on some of these mines and projects suddenly changed. So the quality of their camps and their fit outs and the services really scaled back. really scaled back. Everyone was in it. So coal isn't doing too well. So there's no capex there. Iron ore is going okay, but still it's not at its peak. So someone tell me if there's the capex there to push this, or if it's just spruikering. So, new domain figures have revealed both house prices and asking rents in the mining towns have chalked up a remarkable double-digit growth in the year ending to June 2020. Yeah, but the falls were insane, everyone. You know, you're going to need a lot of double-digit growth to dig yourself out of the hole that some people are in these towns. It comes as local iron ore production picked up pace in the past year and has only accelerated, while supply from Brazil, where the health situation is much worse, has been weak and iron ore prices hovering at high levels above $100 a ton for about 2 months. In Western Australia, Karratha in the Pilbara, 1575 kilometres north of Perth, topped the state's housing price growth, rising a whopping 22.9% to a median of 442,000. It was followed by Port Hedland, the second largest town in the Pilbara, 1,322 kilometres north of Perth, which saw house prices rise 12% to a median of 280,000. Yes, but I want to see the peak, everyone. I want to see the peak. And we'll bring up another chart here to show everyone. I'm not really a chart, a website that I think is quite interesting. This is worldwide shipping. And you can just see all the bulk cargo haulers coming out of WA, everyone. I mean, there you go. There's Port Hedland. There you go. You can just see how much is flowing out of Western Australia. It's flowing out of Western Australia. And if we bring up Google Earth, turn on all the mines, you can see how many of our iron ore mines are in WA. I mean, there's a reason why the West Australians want us to leave the rest of Australia, want to be their own country, because they could probably afford to be honest. So, Curtin University economics professor Stephen Rowley said there was a range of issues contributing to the recovery, but the resources sector picking up again and a changing workforce was key. Iron ore price is very strong at the moment, so the resource sector is going well, and the slight expansion of the workforce, Professor Rowley said. But the nature of FIFO, fly in, fly out, work has also changed since the last mining boom, according to Professor Rowley, with the number of weeks rostered on the job doubling from 2 to 4. Some of them are family unfriendly, so again, from a life-work balance, people are making the decision to stay in these towns, he said. The pandemic has given even more reason for some to stay put rather than being a transient community, he said, as people tried to minimize the risk of losing work due to changing travel restrictions. So we're starting to see more people just stay in the towns, stay in these towns. But the government had also invested in some towns since the last mining boom and bust, as places such as Karratha were quite different from a decade ago. We've seen an improvement in amenities. It's a much nicer place to stay in than 2007, putting greater pressure on existing stock, he said. The West Australian government has given grants for people to stay there, and there has also been a cut to land prices to make it more affordable for people to live there. Mining companies want people to stay locally as well. Workers tend to be happier when they're living where they work, he said. A happy worker is a productive worker. I think that's one of the key drivers, and there's more demand to live and work in these areas. But as the resources sector has gained momentum, and these towns have recorded an influx of workers as a result, it has put pressure on the limited and existing stock. Western Australia. So rental prices in many suburbs of Karratha have recorded whopping double-digit growth, with Dampier house rentals increasing 22.7% to a median of $730 a week in the past year. That is insane, guys. That's higher than Sydney. House rental in Millers Well, another suburb, rose 37.5% to $550. Peered Real Estate, Karratha, selling agent Peter Perrod, said the property market was picking up pace with demand outstripping the amount of rentals on the market. One friend is renting a one-bedroom studio for $550, and he's been told his rent will go up to $775. $550 for a studio in the middle of nowhere. In the middle of nowhere. I spoke to a local value the other day, and he said if you bought a home at the bottom of the market in 2017, you would have near doubled your money now. In the boom days, 6 to 7 years ago, $1 million house dropped down to 500,000. Now it's back to 800, he said. So here we go. There's the thing. It crashed, guys, from $1 million to half. You lost 50%. This is the 50% fall in property that some people are worrying about. But now it's back up to 800. So you're still down 200 grand. And if you paid all those years of interest for 7 years. He had observed that the town has evolved since the first boom and believed that it encouraged more people to relocate. It's quite a livable town. I'm walking down the street and it's got all those cool Melbourne cafes, he said, adding that it was a 10-minute wait for a cup of coffee he ordered. Ray White principal Richard Nullis said increased demand was one reason for the strong growth in rentals, but legislative changes to have longer leases and fewer rent hikes was another. Most of our leases are 12 months minimum, up to 24 months. They're now playing catch up on, he said. I think it's a good legislation change for the ongoing stability of the town. Even through this pandemic period, we leased 28 properties since April. We were actually closed the month. We had a skeleton staff working from home and leasing online via virtual tours. But with rental increases in the order of 22 to 38%, many families are opting to buy into the local property market instead, he said. If you look at the peak of the market, which was almost to 2012, we had a peak of 990,000 median sale price and 2,500 was the weekly rent, he said. It bottomed out in 2017 by 65%. There you go, everyone. Look at that move. Look at that move. In Port Hedland, the rental market is just as tight, according to Hedland First National selling agent Rick Hockey, as mining companies such as BHP, Fortescue, and Gina Reinhardt's Roy Hill all flagged their intention to increase their exports from the port town. There's only 60 or 70 properties available for leasing, Mr. Hockey said. I've been here for 40 years and I've never quite seen it like that. It's very tight at the moment. Not if you're one of the 60 or 70 properties that are looking to get someone in there. The mining industry has not missed a beat. If anything, it's getting stronger, he said. Because Brazil is having trouble with the pandemic, we've been pumping out a lot of iron ore. It will take a few years for all that to happen. It just goes to show they're getting ready to ramp up, he said. Queensland. A similar story in Queensland, where the local regional council area of Isaac, which has kilometres of coalfields, recorded a 32.5% increase to a median of 275 in the past year too. So you could have got in there pretty cheap and made a 30% increase. Or you could have taken a big hit. Rentals in many of the mining towns also rose in turn with Dysart, 933 kilometres from Brisbane, and the service centre for the nearby Norwich Peak coal mine saw house rents increase 26.3 to $240. Moranbah, 788 kilometres northwest of Brisbane, and which services several nearby coal mines, saw house rents rise 21.2% to $400. LJ Hooker Mackay Group Principal Tara Smith said it was simply a matter of supply and demand. What we predominantly saw in the last 7 years, we had a high rate of forced sales and mortgagee in possessions, she said. We've had a high supply in both marketplaces. She said that had been flipped on its head in the past 12 months. What gets created is low supply and high demand, which effectively pushes the pricing up. You can have 10 to 15 rental applications on any property. It creates competition. She said while investors had not returned in strong numbers just yet, many locals were trying to enter the property market. We've seen banks not asking for high LVRs so they can afford to put down a deposit on the properties. I would suggest this is my second cycle in this area. So Rain and Horn, Moranbah selling agent Tabitha Camilleri said the rental market is almost non-existent. Rain and Horn has not listings for rental in Dysart or Moranbah at the moment, she said. There's a lot happening. We won't know until the year's time if mining will be stronger because of the pandemic. As you know, mining fluctuates with the economy. So there we have it, some mixed messaging, some insane property growth, particularly in Port Hedland. We'll have to see how Queensland responds. What do you all think, everyone? Do you think this is a return to the boom in the mining sector? Or is there a potential risk if demand starts to drop off? The iron ore examples that they showed us, over in Port Hedland are doing well, but coal is still only at $55 a ton. Isn't demand tapering? As always, let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you in the next episode.